Welcome to a CNBC Africa special with me, Arnold Kwizera. Now, if you want to be part of this conversation, tweet us at CNBC Africa, or you can tag me directly at The Real Kwizera. Now, as usually, quarterly, we tend to sit down with the Governor of the National Bank of Rwanda, Mr. Rwangobwa, and we discuss matters from the MPC statement to the current economic climate. Now, the past 12 months have been unique, black swan moment, if that's the right terminology to use in regards to the COVID-19 pandemic on the economy of Rwanda. But the Central Bank of Rwanda has decided to maintain the key repo rate at 4.5. And I just want to start there, Mr. Governor. Thank you for always making the time.
Thank you.
4.5, we expected changes today when we came to meet up with you and the MPC announcement, but you have decided to keep it at 4.5. Would I be wrong to say you're being too optimistic?
Would I benefit from you knowing your expectations?
Well, we expected the key repo rate to be increased, being that there's going to be more opening up. So I expected you to play with numbers of about 4.8 to 5%.
Okay, thank you. I think, as we explained, or as you see in our press release, it's the economic fundamentals really direct to that maintenance. So one, our main objective as the monetary authorities is maintaining stability of the economy, inflation stable and low, and our medium term is benchmark is normally 5% inflation. So normally we would, in normal circumstances, would increase repo rate, the central bank rate, if we see pressures, inflationary pressures coming up. So to deal with that, normally we use the tools we have, and the main one of those is the central bank rate. So in this case, we expect low inflation, in fact, below our medium-term benchmark of 5%. First quarter, it was at an average of 2.1% first quarter this year. And we expect that to be on average 2.2% for year 2021. So we don't have any pressures from the inflation side. On the economic side, because we are hit by the pandemic last year, ending up with a 3.4% negative growth last year, and with the, again, slow pick up in the first quarter of this year because of the lockdown. So we need to support the economic recovery efforts across with the other authorities. So this low inflation gave us room to maintain an accommodative monetary policy to support the economic recovery efforts. So by encouraging the banks to continue lending to the private sector. So we don't have any pressure that would really lead us to increasing our policy rate.
And a bunch of questions that I have could be a little bit all over the place here, and correct me if I'm wrong, Governor. When you go to the markets, the prices are still higher than they used to be in what we used to term as the normal. Then one would expect that to have an impact on the inflation.
No, I think depends on what you call normal, because it all depends on different factors that contribute to prices. So last year we had sort of high inflationary pressures last year. We had poor performance of agriculture in the first half of the year, and then we had increase in transport fares in the second half, I think, of the year. So that contributed to high inflation. In fact, at some point we had, by October, it was around 9.2%. On average, we had a 6.5% for the entire year. So that's some commodity prices really increased. Like food had, at some point, food was above 24% in increase. So yes, prices went up last year. And we've seen, in fact, in the fourth quarter of this year and the first half of this year, some of the food commodities we saw negative inflation, so some prices went down. But on average, there's that small increase of 2.1%. Doesn't mean that you expect the prices to really go back down to the 2019 levels you're expecting, because there are different factors playing in here. So, but I think our concern would be continued high increase of above. Normally, our bound is between 2 and 8%. So last year, I think for about 2 quarters, we are slightly above our upper bound of 8%. But we could see it was really driven by supply shocks, and we expect that to smoothen out. As we had said last year, if you follow our press releases, we expected that to smoothen out in the 4th quarter, and it happened as we had projected. And this year, the increase is really minimal at 2.2% on average. So, yeah, that's what we track, and that's what influences our decisions.
Governor, just staying there, let's imagine, and I know the central bank doesn't like to speculate, but let's imagine vaccinations, the herd immunity happens 60% by the end of this year, or by early next year. Do we ever envision going back to that world, the 2019 world, in terms of economic policies?
I think, one, the economic policies today are geared really supporting that recovery. And talking about inflation, we'll look at the aggregate demand is still way below the equilibrium or the optimal that would start kicking into inflationary pressures. In fact, when you look at our projections, I think we expect to see maybe by late 2022, 2023, that's when we expect to see aggregate demand going above the equilibrium, and therefore start putting some pressure. And that is expected that we'll see continuing recovery of the economy. So, yeah, when things come back to normal, of course, we go back to normal economic policies. But in any case, as Rwanda, our economic policies have been geared towards high economic growth and poverty reduction. So we expect to continue seeing that. The pandemic, of course, affected us. So we need to be in high gear now to be able to recover from the depression we had last year, and then maybe we see by 2023 things coming back to normal.
Okay, Governor, I want us to go back to a point, to the earlier point, the 4.5, largely is to enable the banks lend more. We've seen an increase of almost 50% in terms of their loans, but the quality of loans, has that quality of loans also been upped?
Now, I think when you look at our press release on the Financial Stability Committee, I think the quality of loans is a concern, in fact. So the non-performing loans increased from 4.5% end December to 6.6% end March. And we still see pressures because there's still more than 11% of the total loans still under moratorium that were restructured. And so based on the hardships these borrowers went through, there might be maybe continued increase in the quality in the non-performing loans, but that doesn't mean banks will stop lending. In any case, as the economy picks up, new projects are coming up, bankable projects that would interest banks to lend. So I think our advice and our preoccupation as a regulator is to ensure that, one, proper classification is being done with the loans they have on their books, and then more prudence is required as they underwrite new loans. But we expect for them to continue lending.
Well, they wouldn't be making business or doing their primary role if they don't continue lending. I just want to talk about dividends payout. You advised, and advised quote unquote, you advised at the beginning of last year, at the beginning of the pandemic, early March, late April, banks not to pay out. Not only banks, but financial institutions as a whole not to pay out dividends. And that has had a form of pushback. Now, I want to speak for the shareholders who say, you know what, we are still profitable. We should be getting our dividends. By law, mandatory by the Capital Markets Authority as well, which is another shareholder, they should be receiving their dividends. Will this position change anytime?
Yeah, of course, that can't be permanent. We're just being prudent. As last year, we took a decision when they had already declared the dividends. We advised not to pay out the dividends for liquidity management purposes. And good enough, they were profitable again by the end of 2020. But as I said, we had a lot of restructured loans by the end of 2020. Part of the profitability is coming from these interest earned on the restructured loans that were still on moratorium and in actual fact not paying back, but yeah, in terms of accruals, they're recording it as income. And as we said, we're still not sure where the credit risk is heading, so we can't be precise and be sure that the structured loans, even other loans, won't really go bad going forward. So we thought it was key that the banks and the other institutions retain the profits made in 2020. This time it was really advised to retain, not even declare. And that gives them a good buffer. That's why we are saying the credit risk is increased, but we are confident that the buffer they have, the capital buffer they have, can deal with possible losses linked to this deteriorating quality of their loans. And as we had expected, already the increase of NPLs from 4.5 in December to 6.6 within just 3 months, we might expect that to continue deteriorate. So any shareholder that is realistic would be happy to see sustainability of their investment in a financial institution, not quick cash out of this institution. So in these challenging periods we are in with a lot of uncertainties, I think it shouldn't really be taken as a decision of the regulator to withhold the dividends, but it is the prudent thing to make to ensure that there's sustainability of the business. But of course, as regulators, we protect the depositors. So we want these institutions to be stable and sustainable in the interest of the depositors, leave alone the investors. So I think that is really key. All going well, we expect by next year we should have really, assuming things continue normalizing as we see now, maybe by next year we should have known the extent of how these restructured loans or any other loans might affect the stability of the quality of the assets of the banks. And so this can't be permanent, no. So if all goes well, we expect things to come back to normal.
Governor, I was speaking to one of the CEOs of the commercial banks recently, and their argument was, if you look at our balance sheet, it's very healthy, and we're in a position we can pay and still maintain the buffer, and that they're going to come to you and they're having these conversations with you if they can be allowed to make those dividend payments. Do you say that there might be a change in policy, maybe a kind of mixed policy? Maybe you're going to set a ratio and say, okay, if you can meet these new terms and conditions, then maybe you can go back to your shareholders and pay some form of dividend. Do you envision that anytime soon?
You know, it's difficult to discuss prudential matters in the media. So I'm sure the CEO you're referring to, I don't know whoever, didn't take you through the details of the quality of their loan book. So for us, we go into details with them, and we look at it, and so I wouldn't want to go beyond what I've told you. So generally speaking, we think there's a risk. We are being prudent. The declared dividends of 2019, when we are we are able to see what's happening going forward, those will be paid. So we can't say when, but depending on what happens by the end of this year, that should be okay. But for 2020, I think it's the interest of everybody to keep that, to beef up their business. In any case, assuming the risk we are expecting doesn't happen, and therefore they continue healthy books, so they'll be making good profits going forward, and they'll be able to reap from the prudence they took this year. And when you look at most of these banks, or even financial institutions, none of them really pays 100% dividends, even in the past. Most of them pay the maximum 50%. So if they remain healthy and they are good, maybe the next 2-3 years, they have the liberty to pay even 100% of the dividends then, and it will be much bigger because they have built their base.
So basically, we look into the future, next 2 to 3 years. Well, that's a message for you, shareholders and investors out there in the banking sector. I hope this may not have an effect on our capital markets.
No, I don't think so. As I said, any serious investor will be interested in the sustainability of their business, not quick cash. It wouldn't make sense if they paid out dividends today and tomorrow we are pushing them to bring in new capital. So we don't want to reach that scenario. So it's in the interest of the shareholders to have strong financial institutions.
Mr. Governor, I want to also speak about the franc performance, the Rwandan franc. Right now, it's at I'll use the word whooping 1,000 francs to the dollar. 5 years ago, it was at about 600 francs, 650. It was flirting with those figures. So that's about a 400% increase over a period of 5 years. Now, should we be alarmed?
Is it 6 years ago, really? 5 years ago?
5 years ago. 40%. 40-60%.
I may need to check that.
Yeah, but 1,000 to the franc, 600 to the franc, that's a 40% increase. Should we be alarmed?
No, we shouldn't. We shouldn't. I think we've said it before. Based on the economic fundamentals and the structure of our economy, we expect to see levels of depreciation every year because we are a country that is investing heavily for development, and so the import bill remains high. We're a country that is, the population dynamics are changing and consumption patterns are changing. So before we are able to really produce what the population needs, there's still increase in import of basic needs or needs for the population. So the import bill is still high. Though exports have been growing, but the import bill is still high. So because of that structure imbalance in our economy, we expect the franc to continue depreciating on an annual basis. It would be wrong if we artificially stopped the franc from depreciating. At the end of the day, we'll make it competitive internationally with our trade partners. So it's normal for competitiveness purposes that it goes as the fundamentals of the economy dictate. And so normal on average we've been depreciating around 5-6% on an annual basis, which to us we feel is a necessary evil for the stability of the economy and for the growth of our export base, for the growth of our production, of our manufacturing, because you can't have an artificial currency and you expect to promote domestic manufacturing or exports, because it will be totally uncompetitive. So now hitting 1,000 as a number, I don't think it means a lot. So we are saying in the first quarter of this year we depreciated by 1%. In fact, in the first 4 months of this year. And so that increased from 990 something to 1,000. So it's increasing to 1,000. It's like it increased from say 750 to 770. It's the same. of course, there's that symbol of hitting 1,000. It was bound to happen anyway, because as I said, it is depreciating every year. And that's the dictates of the economic fundamentals of today, is that we are at that level. So nothing has changed from what the trends of the franc over the last 1 year or so. It's last year, I think we depreciated by was it 4.7? This year we expect to be set above 5%, though so far the 4 months indicate we might not hit that level. But because we are seeing opening up of the economy, we expect the import bill to increase. But the good thing is we see exports have increased because commodity prices are doing well globally. Yeah, so it's normal to really see this franc depreciating in tandem with the economic fundamentals.
And good that you bring up commodity prices, the global economic prices. We've seen them hit record highs, record 12-year highs, some of them. But our major exports, when it comes to the traditional exports, coffee, tea, those have taken a dive, especially in the past 12 months. Just looking at the Mombasa tea auction last week, there was a reduction there in the prices of a kilo of tea, going to about 1.82 Kenyan shillings. And so will we be able to sustain this export momentum, being that there's a caveat to how much the commodity prices can go in the near future?
I think the strategy of the government has been diversifying our export base. As you've seen, when you look at our numbers, like the commodity, what we call the traditional exports, that's the commodity exports, tea, coffee, minerals, hides and skins, I think as a share of the total exports has reduced from above 60 to around 33, 34% by, I think, 2020. So there has been diversification of exports, and so we understand the risk of relying on these commodity exports. And so, one, there has been that diversification in terms of the commodity exports in general, because the non-traditional exports and the re-exports have really picked up in the last 5 years. Unfortunately, today we are hit by the crisis, but there was big drive on tourism as a main source of our foreign exchange. So, but we expect this to recover in the next 3 years or so. So yes, we can't build an economy based on just the traditional export, the commodity exports. So there's efforts to diversify our exports.
And Governor, you quote that before it came out, the tourism recovery. 3 years, basically, are we in this for the long game in terms of recovery? For many who think, as long as people are vaccinated, as long as people are able to move around, we should recover in 2 years. You think it may take longer than that?
It's really difficult to predict what is happening in this world today. There's a lot of uncertainties. The new variants coming up of the virus, the confusion around vaccination across the world. So you can't know where we are heading, to be sincere. So I wouldn't want to put my foot down and say we'll be there in the next 2 years. I hope so. But based on the challenges we are facing, maybe next 2 years or 3 years. Yeah, so the challenges are still there, and we need to be ready to face that for quite some time.
Governor, one sector also in the financial, among the financials, the subsidiary of the financial sector is insurance, and it seems to be a start and stop situation when it comes to the insurance sector. It's, one moment we're very optimistic about it, the next moment it's performing way, way below expectations. What can be done to ensure there's better performance of the insurance sector? Because that's fundamental to the growth of, the likes of Kigali International Finance Center and our economy at large.
Sure. No, I don't really think it's been a start and stop as such. So if anything, I think it has been sustainable. The improvement in the performance of the sector has been consistent over the last 3 years or so. We had challenges back in 16, 17, but since then we've had positive trends in the sector, and we expect this to be sustained. I think maybe what you're referring to is the noise we had at the beginning of this year and the increase of premium rates for non-motor products. No, I would say normally that's part of the recovery or the order being put into the sector. Though it's done in a way that is a bit haphazard, could be done better. So the biggest challenge this sector had over the past 5-6 years was negative competition, price undercutting. And the insurers ended up really undercutting themselves to the bone. They lost all the fresh, and so the pricing of the risk they are taking on was way, way below the risk they are taking on, and that impacted their performance. Today, they mainly rely on investments to make profit, so they are getting businesses still making losses, and that can't be sustainable. So as they tried to stop that negative competition, they agreed to work together as an association, and that created its own problems, and I think they've been accused of working as a cartel. And again, the challenge they had linked to the outcry we had in 2018 when they increased the motor insurance premiums. Even this time they just lumped everything at once. So they messed up the pricing for over 5 years, and all of a sudden they want to correct that mess within just one-off increase in
and Governor, isn't it a reflective of one will say leadership in the sector, or a lack of understanding of how best it should be performing?
I think they're just desperate to correct the mistakes they made in the past. And so the fact that they had an actuarial scientist to advise them on the right pricing of these products was in the right direction. And so, but when they received this advice from the actuarial scientist, they should have put it into context. How do we move forward with this? It being done by a scientist, well and good. It being maybe the right pricing, well and good. But how do you manage it even in the current circumstances we are in? So I think that's where they didn't manage to put things into context. Otherwise, they needed to increase the pricing to be able to cover the risks they're taking. I think the engagement we're having with them is, please, you can do this piecemeal. You don't have to just throw everything on your customers during this crisis, just like that. And so I hope we're reaching an amicable solution with them soon.
Thank you as always, Governor John Rwangombwa. That was our conversation with Rwanda's Governor John Rwangombwa on matters regarding the key repo rate and current economic trends in the country. Now, if you want to be part of this conversation, tweet us at CNBC Africa, or you could tag me directly at The Real Quizera. Have a great rest of your day.